What's more reliable in a world where money can be printed and trust in banks is fleeting? Gold, proven over centuries. Or its digital successor, Bitcoin. Or perhaps it's easier to buy not the asset itself, but simply a piece of paper representing it. Today, we'll break down 3 key concepts: Bitcoin itself, Bitcoin ETFs, and so-called paper gold. And we'll find the answer. Where is the real value? And where is it just a convenient illusion? Let's start with the basics. What are you actually buying? The first option is Bitcoin. By purchasing it, you become the full owner of the digital asset. It's like having a gold bar in your own. Secure, safe. Your coins are your keys. You don't trust anyone with their safekeeping. You control everything yourself. The second option is a Bitcoin ETF. That's a different story. By purchasing its shares, you don't own the Bitcoin directly. You own a stake in a large fund, like BlackRock or Fidelity, that promises to buy Bitcoin for you. It's as convenient as a safe deposit box. But remember, the bank holds the key. The third option is paper gold. This is what they call ETFs, futures, and gold certificates. You don't receive a physical bar. You receive a paper promise that gold is stored in your name somewhere in a vault. Or, more often, you simply receive the right to the difference in price. And now for the main point. How do these 3 approaches differ at their very core? It all comes down to the source of your trust. Let's compare them one by one. Take Bitcoin. What do you have? You have direct access to the asset itself. Who or what do you trust? You don't trust a bank or a company. You trust the mathematical code and the decentralized blockchain network, which cannot be forged or stopped. What is the main risk? The risk is losing your own access keys. The responsibility lies entirely with you. Now a Bitcoin ETF. What do you own? You own a security, a share of a fund. Who or what do you trust? You trust the management company, for example, BlackRock, and the regulators who oversee it. What's the main risk? The risk is that the fund or its partner will go bankrupt, make a mistake, or run into problems. You depend on their integrity and stability. And finally, paper gold. What do you own? You have a financial obligation, a promise of payment. Who or what do you trust? You trust the issuer of this security and the entire global financial system as a whole. What's the main risk? Systemic risk. In a real crisis, when everyone wants to get their hands on real gold, there could be many times more paper obligations than physical gold in vaults. Promises may not be fulfilled. As one well-known investor aptly put it, owning an ETF is like using a picture of a gun for self-defense. It's convincing in quiet times, but useless in a real crisis. This is precisely the root of the complaint about paper gold. Physical gold on the planet is limited in quantity, and its production is difficult and slow. But paper rights to it, futures and obligations can be created many times over. Imagine, a single bar in a vault can formally serve as collateral for dozens of different contracts simultaneously. As long as the system is stable, and not everyone demands delivery, everything works. But this is like a pyramid scheme of trust. In a moment of general panic, it could collapse, leaving many people with worthless paper. With Bitcoin, such a trick is fundamentally impossible. Its issuance is strictly limited by the protocol and leave 21 million coins. No bank or government in the world can print more. Everything that exists and will exist is transparent and visible on the public ledger, the blockchain. So, who are each of these instruments designed for? Bitcoin is the choice of those who believe in the future of decentralized finance. It's for those who value complete sovereignty and are willing to take responsibility for their savings. It's a philosophy of independence and trust in technology. A Bitcoin ETF is the ideal bridge for a traditional investor. If you don't want to understand the intricacies of crypto wallets and exchanges, but want access to Bitcoin's growth, this is the path for you. Remember, you're paying a fee for convenience and trusting the intermediary. Paper gold is primarily a tool for trading and speculating on the price of gold. It's convenient and liquid for short-term trades. But if your goal is long-term capital protection from systemic shocks, this paper may prove unreliable. Let's draw the line. The fundamental difference is this: Bitcoin and physical gold are assets you own directly. Bitcoin ETFs and paper gold are financial obligations to you, the fulfillment of which depends on others. Your choice boils down to a simple question: who are you willing to entrust your financial security to in times of need? An impersonal, but infallible algorithm, or an equally human system that can fail? That's all for now. If you found this audio article helpful, please share it, and be sure to subscribe to our channel so you don't miss new videos.